What's up, Bat family? Welcome back to the Build a Trader YouTube channel. My name is Joshua, and I believe that's the first time I've introduced myself in a video. In this video, I'm going to teach you guys how to pass a funded challenge so that you guys can get these live funded accounts and start trading with sizable capital. I recently just became a 100K funded trader and just got the live funded account. I'm going to show you guys how I did it, and I'm going to show you guys how you can do it too so that you can get one of these accounts as well. Just give me about 15 minutes of your time, and by the end of this video, you will learn how to be able to pass a funded account challenge. Let's cue the intro. Alright guys, for simplicity's sake, I already have everything pulled up. I honestly just recorded this video and it was almost finished edited, and I had deleted part of the clip which made the whole entire video unusable. So I already have everything pulled up for simplicity's sake. So currently we have this phase 1 passed, upgraded, closing this tab. Phase 2 passed, upgraded. As you can see, phase 2 upgraded my Forex funds, and as you can see, email proof right here that congratulations Joshua Wesley, you made it. It is our pleasure to present you with the credentials to your live account. Okay, so yes, I am a 100K funded trader with my Forex funds. Positive thing about me deleting the first video is that this video is going to be a lot better, and we'll have even more detail on how to pass these funded challenges. Here we go. Let's start things off. I'm going to open a blank chart and give you guys a step-by-step list on what needs to be done here so that you can succeed, and the process that I use to succeed as well. I'm just going to add some notes on here, okay? First things first. When you get one of these funded accounts and when you're going for these challenges, there's a few rules you have to stick with. And if you stick with these rules, you will succeed. But if you violate these rules, you're going to get in sticky situations, and ultimately, you're not going to pass. Or if you do pass, you're going to get the account and either not keep it or get yourself in a large drawdown. So here's what you need to do in order just to pass these challenges, okay? Step 1. Before I give you guys the step-by-step process on what to do and show you guys trade examples that I took to pass my own challenge, it is important to note that if you do not have a skill set developed, or have not been trading for that long, or have not been able to trade profitably on your own at any point in time, a challenge is not going to do you any good. You need to get a skill set first, be able to see some consistency on your own end, and then go for one of these challenges. Otherwise, it's just a shot in the dark, okay? Step 1, choose a trading session, okay? So for me, it's New York session. You need to stick to these sessions because they help you develop consistency in your trading. You can also trade Asia session or London session, but remember, successful trading comes from 1 to 3 trades a day, 1 to 2 good trades a day, in between that range, because as humans, we can really only make 1 to 3 emotional decisions a day, and trading is obviously emotional in itself, watching your capital fluctuate and placing trades and everything as such. So trading session, for me it's New York session. Have a solid trading plan and stick to your plan. Stick to your trading plan. Next, stick to your risk management plan. I'll go into more details on this, but this is basically what you need to follow. Stick to risk management plan. Take profits. Step 4 is take profits consistently. The whole point of passing these challenges is taking the gains because they add up, because you need to hit that profit target. So you don't need to let your trades play out or let it fluctuate and breathe. A lot of times you need to take what you get and scalp and look for another opportunity. Scalping is very effective here. And I scalped a lot in passing my own challenge, and I could have passed on just a few trades, but I let them go too early. But that's the name of the game. Sometimes if you stay in too long, think it's going to go for more, then you miss your chance to profit altogether. And then which one is worse? Losing or making less money than you could have? And honestly, it is losing. Losing is always worse. So you have step 1, trading session. Step 2, stick to your trading plan. Step 3, stick to your risk management plan. Step 4, take profits consistently. And lastly, step 5, learn to walk away. All right. These are the principles that you need, and essentially learning to walk away is being disciplined overall. These are basically just the fundamentals in passing this challenge. These funding challenges, you need to stick to these basic rules, okay? This basic checklist. Feel free to take a picture of this if you want. However, let's dive more into this real quickly before I go over some trade examples and show you guys how I did this. You need to be trading in a session that makes sense for you. Now, many of us have jobs, so we can only trade during certain times. So whatever session works for you, you need to trade that session and show up for it. Even if you have to wake up earlier or get a little less sleep, it's about commitment, and that's what you have to do. Okay, so find your trading session that works best for you. For me, it's New York session, early in the morning here, and you need to stick to 1 to 2 pairs as well. Next, sticking to your trading plan is going to be the most crucial thing. Everybody wants to pass in 1 day or just a few days. Now, it's very possible to do that. I have done it. I just showed you that I've done it myself on my own evaluations. However, I don't recommend doing that, and you don't need to do that. There's plenty of time to pass within 30 days. Now, for those that don't know the rules for passing a challenge, for most firms, the rules are you have to make an 8 to 10% profit target in 30 days, and that is phase 1. Once you achieve that, you move on to phase 2, and you have to make a 5% profit target, and then you move on and get the live funded account. Now, there's some drawdown rules, obviously, and those are sticking within a 5% loss limit within a day and an overall drawdown limit of 12% of the overall account balance. So you have to stick to those rules, and once you hit the profit targets, you move on through the phases until you get to the live account, okay? Sticking to your risk management plan is going to be the most important thing. Now, you can risk with size on these accounts, okay, because they give you that leverage to do so, and you have to stick within a reasonable lot size range, okay? So on a 100K account, in theory, yes, you can put 10 lots. However, you need to stick to the 1% rule, okay, even up to 2%, but even then, you want to stay within a threshold of 5%, because once you get a little below 5%, or a little more than 5% in losses, it gets a little more difficult to start coming back, especially in that time frame, and then, you may have to over leverage on one big trade and get out of drawdown, or take a series of trades, but overall, it messes with your mindset, and it's a lot more difficult for you to succeed by getting yourself in that type of situation. So follow your risk management plan. Stick to your risk management plan. 1% a day, 1% trades. It's okay to risk using high lots, but you need to stick within a reasonable lot size limit, and you need to stick within your risk parameters, okay? So even if you were going for like a 10K challenge, you can use 1 lot, but 10 pips is 1%. So you either need to have a tight stop loss, or if you see it as a momentum trade or a breakout trade, you need to cut it when it is at 1%, or even that 2% threshold max. And if you are up in profits, up a quick 1%, 2%, take it, because that is a very fast gain. And on top of that, you are using high lot size for your account size, for your account balance. So in order to stay consistent, you need to close when you get that money. Okay? Secure the bag. Stick to your risk management plan and take profits consistently. Scalping is very effective. A lot of times you're going to be up on some of these trades, and then you're going to think and fixate on your take profit price, assuming that or anticipating that price is going to move into that price point that you have analyzed, and it doesn't. And say you're up 1 or 2% and you don't close, and you take the loss. Well, you're trying to pass these challenges. You need to close for that 1 to 2% that you had, and then find another opportunity. That's how you consistently pass these things. But when you try and let your trades play out and it comes back and stops you out, then ultimately, or for me at least, I think, wow, why didn't I just close? And it's simple as that, and that's what trading really is. Trading at the end of the day is just making money. Lastly, before I move on, you need to learn to walk away, stay disciplined. Once you catch your gains for the day or your good trades or even take your loss, you have to walk away and be done, because once you get that live funded account and you don't follow that rule, it's going to hurt you in the overall, okay? So one, learning to walk away and be disciplined is going to overall benefit you in the long run in your trading career, helps you stay out of even messier situations, and ultimately helps you learn to be accountable and be an overall better trader. If you eliminate revenge trading and over trading and learn to stay disciplined and walk away after you've caught your trades for the day, you'll begin to see a lot more consistency in your own trading. Okay, life is not built in a day, and not every day is a trading day. Okay, so first we're just going to go to gold. Now, as I said, I did already record this video, but here are some of the trade examples that I caught on gold. Gold sells, and we had no buys, it was just sells. We caught some good sells on gold, and it helped me make a lot of profit on my phase 2 for the 100K challenge. Okay, gold was very bearish at this point in time when I was trading those accounts to pass right here at 1850. In this range was when gold was trading back in February 15th. So just about 2 weeks ago, a week and a half ago, right in this range right here. Okay. Now on the left side is the 2-hour chart. We're going to go to that same exact area so you guys can see how price looks on the lower time frame. All right, on the right side, I'm going to drop down to the 12-hour, just a little more details. So first, right here is a really good setup that I caught. And I let it go too early, but this one trade would have passed me because I had a total of 5 lots on there. And gold at this time moved for a lot of volume. Okay, as you can see, in this price range, gold was very volatile, but also just moved a ridiculous amount until it broke 1850 and then fell for 200 pips. So first, here was the first sell I caught right at this point. I entered at 1856 and closed at 1853, 1854, right in this price range, right in this candle. There's a lot of volatility, so we entered right here. And let's look to the right. On this candle right here, as you can see on the 12-hour time frame, we are very bearish at this point in time, and I had a total of 5 lots on here at 1857, 1856 price range right here. And I sent this in the Telegram as well to the students, but this was a very quick move. Let's go down a bit lower to the 15-minute. Now, I took this trade because one, the price was already bearish, the momentum was down, the structure was bearish, and on the higher time frame, I could see that price already rejected and was moving down and was below this point, making a lower high and rejecting, and I entered on these rejection candles. Now, it was right here where I exited actually. I was targeting these lows down here, but I closed on this volatile candle. Then there's a little pullback on these next few candles afterwards, and then ultimately continued lower. But this is where scalping is very effective. So I entered, I believe my stop loss was just right at 1860, right above here. And let's drop a tad bit lower so you can see what happened on that volatile candle. Alright, so here we are on the 5-minute time frame. As you can see, price had that move down, came right back up, and then had to move down again, came back up, and then ultimately broke lower. But we caught this nice little scalp, and you could have taken the same exact trade multiple times or another additional time down to the low. But this is where scalping is very effective, because then you could enter it again and caught the same move and caught the same amount of pips, or caught the whole entire trade and could have passed your challenge. So this is what I was saying, oh, I could have held, and trusted my analysis, and, I would have passed, because obviously price fell for a total of 60 to 70 pips, and that would have nearly passed me, and I would have scaled in with more size as well. But, I closed for my 1.5% gain on this trade. That was 1.2R. I believe I was up $1,500, 1.5%, and closed, and then price came back up, and the rest is history. So this is one good trade example that I took, and how scalping is very effective. Now, there's absolutely nothing wrong with scalping. Lots of traders make lots of money from purely scalping alone. Now, scalping works best on more volatile assets like gold and indices like the NASDAQ and US 30, but those are not for beginners and they move very quickly. And as you can see, this was a 40 pip move, and then it came right back up, ultimately to drop for another 70 to 80 pips. So very volatile, but with good trade management and risk management, you can succeed. So next, and I did take losses as well. I called a lot of trades in the Telegram channel, in the premium channel, a lot of signals that I personally took on. I always take all the signals, but that I took on the 100K phase 2. And some are losses, but I was able to bounce back, and a lot were wins as well. So a lot of those trades helped me pass the challenge as well. Another good trade that helped me pass at that point in time is the sells on the NASDAQ 100 here. Okay, we're looking at this zone right here, or this area, this price point. Lots of volatility in this candle, as you can see on the 4-hour time frame. Okay, so on the left side, we're looking at the 15-minute time frame. The right side is the 4-hour time frame, looking at this blue rectangle here, looking at this price point, this price range here. Okay, so at this point in time, what did I see? There was resistance up here. That price had just made, and this was a news candle, which caused this major spike down. And I also saw a reject from this point as well. But to me, I saw that price was most likely going to tap this level again and come back down before either making a lower low point or moving higher. Now, as we can see, after this move down, it did end up pushing higher, making higher low, and trending back up. It ultimately came all the way back down the following week. However, at this point in time, I caught these sells just like this. Right here, 125, 1255, 1256, with a stop loss at 12600, right up at this point. Right here, right this move. And I was targeting 12400, although I did close early, but this was a almost 3-hour trade, 2.88 risk to reward, and this is a very strong momentum trade. But as you can see, this 15-minute candle, just strong bearish momentum here. I'm going to go down to the 5-minute on the left-hand side. As you can see, strong bearish momentum, strong bearish candles. Now, with the price range tool on this candle here, you can see this one candle moved for 31 points, and then this whole entire move was 145 points, 150 point move. Now, I believe I closed at 1248. Yeah, 12480 right here, where I'm drawing this blue line. 12480 right at this point. Okay, I didn't want to get greedy. However, I could have held the trade. As you can see, this trade would have almost passed me as well. I believe I had 5 lots on here. And at this price point, a total of 5 lots. I'm not putting the full volume on right away. I'm scaling into a lot of these trades. This was 70 pips. So yeah, this was a 50 to 70 pip move. Closed for it, took my money, took the profits to help me pass. So how I'm trading is this. I do have videos on this on my channel already, and here's a playlist right here so you can see for yourself on how to use this strategy. But ultimately, you start with a smaller lot size and start scaling in once the trade is working, and quickly reduce your risk. And once you get in with the size, you take your gain, because a lot of times if price doesn't play out as you think and ends up coming back, you miss out on a really good opportunity to make a good profit on the account, ultimately because you wanted to fixate on your take profit price instead of taking what you get instead of what you want. Now, obviously, sometimes your trades are going to play out exactly according to plan, but sometimes you have to adapt and simply just take what you get. But yeah, this was another good, really high probability trade setup. Right after the retest, after the news, price came back, retraced, and got in with the momentum after this lower time frame breaker structure right here. Turned the retracement and came crashing down. Now this video did go a little longer than I said it would. However, I hope you guys learned a lot out of this. If you need additional guidance, consider joining the B.A.T Signals free Telegram channel. Link is in the description of this video. Don't forget to follow the Instagrams, B.A.T Signals, @BuildATrader, and I'll see you guys in the next video. Have a great weekend and peace.